Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny, and holy crap, I think Elon Musk might be finally revealing himself as the guy who's been swimming naked for a long time. We're starting to see some cracks in this Tesla empire, and I'm going to put a little bearish trade on before earnings. We're going to talk about that then in this video.
Two Super Guys Trade Stocks.
Well, well, did you see the headlines?
So he cut it again. I don't know how much. I don't know because
So
it was super inflated. So I don't know if we're back to like pre-COVID or not.
that's actually an interesting question. I actually didn't look at that relative. Each model line had a different cut. You're talking about it was like 5,000 on the S and X, and it's like 2,000, I want to say, on the Y, and then 1,000 on the Model 3 was the most recent cut. But still very expensive vehicles. But I mean, the fact that they've cut prices 5 times in the last 3 months, yet the stock went up 60%, like completely disjointed to me, right? People are like, obviously, they cut the prices, people buy more of it, company makes more money. Is that how this works? Not so much.
So it looks like it's going 43,000 with zero upgrades, not including
Yeah,
taxes, destination, and other fees.
sounds about right. So, remember Elon Musk talking about his long-term promise of Tesla averaging 50% growth per year? They missed it last year, and it's getting even worse. Okay. So the most recent quarter, we had 36% increase. Don't be wrong. For a lot of companies, 36% increase year over year would be phenomenal, right? But they're not trading at the same kind of valuations that Tesla's trading at, where they're pricing in these ridiculous growth multiples.
I think he
If
was.
Intel grew at 36%, it would be off the charts.
It's true. I think he was hoping Doge was gonna really go to the moon there, and that would have taken Tesla to new heights.
Yeah, more garbage. Okay, that's all I have to say about that. But continuing to kind of underperform from their own internal expectations, despite the fact that they're having to serially increase their sales cuts here now, or price cuts. The other interesting thing is I gave them kind of a pass on the price cuts in the fourth quarter of 2022 because they were trying to get ahead of the tax incentives. Right, tax incentives rolled out for the first quarter of 2023 from that Inflation Reduction Act. Remember those?
Mm-hmm. Yes.
Yeah. So, it made sense that people might be trying to delay their purchase into the beginning of 2023 in order to take advantage of those. Yet, we have our production and delivery numbers here for the first quarter of 2023, and they were still going at 36% year over year increase, down. And they have said in this quarter now, they've cut prices basically 5 times, just absolute insanity. This is trying to start to show the little cracks that maybe they aren't be able to generate as much demand as they had hoped.
I think I also just the sheer amount of electric cars coming on the market now, right? Because I mean, they were first to market. They were other competitors, but frankly, I mean, they're kind of shit, right? Like Tesla was significantly better at the price point, but now, like, I need an electric car for work. I, it was literally two Chevy Bolts or one Tesla Model 3, same price. So
Yeah, yeah. And this is coming on the heels of the fact that we've had quarter after quarter of like sequential reduction in the actual gross margin. Yet people are still saying like, oh, it's going to economies of scale, and they're cutting prices at the top line. They haven't been able to demonstrate this economy of scale despite the ramp up of their Austin facility. I'm starting to think that we're going to see a real revaluation and change in the Tesla multiple soon. I know I've been a Tesla bear for a while, but I'm starting to think that like, yeah, we're getting close to a point where we're going to have some real revelation around one of these earnings events.
I did not realize I was holding my camera in front of the thing. Sorry, guys, for people that are watching that.
Yeah, it's all good. But yeah, this is talking about the gross margin right here. They've had one quarter that popped back up, but they've been pretty consistently dropping down here as far as the gross margin goes. Who knows what's going to be now this coming quarter? Because like I said, 5 price cuts. That's ridiculous.
The
In one
the
quarter.
I mean, a big problem with Tesla for the short side is this company does not move like an S&P 500 company. It's
Yeah.
terrifying. It's absolutely terrifying.
Yeah, yeah, I know. In a quarter where they've disappointed in terms of their number of actual deliveries and their projections there, and then they've had to cut prices. So you're probably expecting some continued gross margin contraction. Stock was up 60%.
Well, I mean, like, just look at this, right? So this is $300. This is down to 110 or $100. That happened in the span of 3 months. Remember, people were mad that Tesla was not in the SPY for a while. This is why they didn't. I mean, this is 1.5% of the entire S&P 500, and it's a stock that has moved from 300 to 100 to 200 in a matter of 4 months. Like,
Yeah.
what happens? I don't.
I know. Well, I'm kind of thinking April 19th, they announced their production numbers. That's when their actual earnings are going to come out for the first quarter of 2023. Based upon the news stories here, I don't know. I'm starting to think this is going to be disappointing. And, it all it takes is one quarter for you to kind of reevaluate the multiple business deserves. Check out Netflix and Meta's performance last year. That's exactly what happened to them. And you can have a massive sell off during one of these earnings events. So this is the trade I was kind of thinking here. So literally going to like 2 days after the earnings event, so not exactly very far out. And my idea was to basically do a kind of how do I put this, a call credit spread that kind of straddles the current price of the stock. So sell the 180 and buy the 190. It's a $10 wide basically spread at that point. So it's about break even as far as what we'd expect in terms of return. So it's a flip and a quarter. One way, if it takes off, I could lose $500. If it stays even or it goes down, I can make $500.
I do like that trade actually. So stays even or goes down, make $500.
Well, if it stays even, I would basically end up almost flat. If it
Okay.
goes down at all, I can make up to $500.
I wonder what if I was to buy even more risky, just a put on like 428 expiration and have it be like 130 strike price. I mean,
I mean, it's
that'd be. I'm assuming it can't be that expensive.
I don't know. I don't know. That'd be worth checking out. Actually, I'm not. We can talk more about that offline. But it's an interesting idea. Tesla options are always very expensive. This is literally a couple weeks out. You're talking about $1,200 in premium
Well,
here.
yeah. Look how much they move. It doesn't. They don't move like an S&P 500 company. It's weird.
Exactly. So I don't know. I think I'm going to take this trade. Try to talk me out of it in the comments down below. But I'm a
Hmm.
pretty stupid guy.
I actually might take it too, to be honest. All right, guys. Thanks for watching.
Next one.